This episode is brought to you by Prime XBT, #1 Bitcoin platform for active traders from stock indices, commodities, forex, and of course crypto. So get over to primexbt.com by using the link in the description below and get up to $100 in trading money for your account. primexbt.com. I'm out of here. Holla. Yeah, it's your boy Crypto Blood. Welcome to another episode of My Two Satoshis. It is April 9th, 2020. Shout out to my YouTube member, the Tech Geek. He just actually upgraded to acquaintance level. Thanks for the support, bro. He wanted to hear the song Jeezy Billions. This is off his latest album. This is nice, man. Thanks for putting us up on this one. What's good, people? Hope you guys are doing well today, and welcome to another episode. Today we're going to look at the stock market. You know, that's been my theme lately, showing you guys a correlation with cryptos and the stock market. I still am sticking to this thesis, and I'm going to show you an article that's actually out of Zero Hedge that's talking about, how overvalued stocks are right now. It seems like, we had I think 29% run up from the lows in March. You would think, hey, maybe, things are settling out, things are looking good, but no, if you look at, I'm sure they're looking at earnings here, it's going to be extremely overpriced because, as we know, we're completely shut down. There is a demand and supply shock going on here because of this coronavirus. So you can't even, these valuations are still way overvalued. The prices of these stocks are insanely high. If you look at earnings per share, you look at those type of metrics, it's just not looking good. So if that's going to be the case, then we should, and that's a should, be going lower in stocks, and consequently I think that will affect cryptos in the short run. We'll take a look at the details, though, out of Zero Hedge. Also, Mike Novogratz, just talked about him the other day. Galaxy Digital just announces their Q4 losses for 2019. They posted a $33 million loss. We'll look at the details and see how much they lost for the whole year of 2019. They didn't do well in 2018 either. So this is another element that we need to look at when it comes to people like Mike Novogratz, which I would consider, and everyone would, an institutional investor, right? Galaxy Digital, his crypto hedge fund, that's institutional money, okay? He made a statement last week, I believe, saying that if Bitcoin doesn't touch 20,000 by the end of this year, he may be hanging up his spurs. And again, that's more forced selling, right? We're going to take a look at all that here in a second. And lastly, Ethereum 2.0. Do you guys remember that? Where are we with that? Remember, it was supposed to be 2.0 coming this year, right? Nah, not happening. Test nodes, or I should say Trust Nodes, talks about Ethereum 2.0 testnet and where they are in everything. And we're going to take a look at this here in a second. Crazy. They're far off, people. They are far off. And again, I predicted that this would be something we wouldn't see for a couple of years. I'm still thinking 2021, mid 2021, maybe late 2021, we see Ethereum 2.0 actually go live. We're just simply talking about the testnet. We're not even talking about going live here. Okay, we're talking about where is Ethereum 2.0 testnet. We're going to take a look at all three of these articles here in a second. But before we start, if you guys find these types of videos informative, make sure you like, share, and subscribe, and click that bell to receive more videos like this. All right, let's take a look at the heat map for today. We've got Bitcoin down just about 0.4% right now at $7,292. Ethereum is down 1.4% to $170. EOS down 0.5%, $2.71. My man Litecoin, Johnny Kim, for $46.08, down 0.71%. And speaking of Johnny Kim, he will be my co-host this weekend on Off the Chain, so definitely tune in for that one. That's going to be a great one. We've got XRP down 1.3% and Bitcoin Cash down 3.7% to $257. And as you can see, technically speaking, we're still looking on track to be very closely correlated with the Dow Jones, as you guys can see here. So, we're kind of losing momentum here from a technical standpoint. If I start drawing my trends out, draw one right here, and then I can draw another one. If you don't want to go that steeply with your trend line, you can draw one right here, and then you can extend this one from this pivot point about right here and connect upward there like that. Technically and fundamentally, but more so fundamentally, I'm seeing some really hard days short term for Bitcoin coming up. I think we're going to see another drop. We're bumping up against this 7,400 area, and it seems like we're kind of losing steam here. So maybe even technically we're breaking down a little bit, but fundamentally is where I'm garnering all of my opinions from when it comes to Bitcoin heading lower short term. Let's take a look at the first article out of Zero Hedge, and it is about equities and how overpriced or overvalued they are. It says here, as the U.S. enters a depression, stocks are now the most overvalued ever. It says 2 days ago, you would think, I thought they would be overvalued at $30,000 Dow. No, not necessarily if you're looking at earnings, right? We're coming into earnings season, and a lot of how stocks are valued is based on earnings. So we know that these earnings are coming back. It's going to be a big pullback in earnings here. But Credit Suisse chief equity strategist, who is usually one of the most bullish Wall Streeters, published a chart showing that any temporary cheapness in stocks hit in late March was long gone, for the simple reason that forward earnings have plunged. As a result, as of noon on March 7th, when the S&P 500 had risen as much as 22% from March 23rd lows, forward stock multiples had surged right back to 19x, which is insane. And article goes on to say, why is this notable? Because the analyst said this is the same level the S&P held on February 19th, and that was at all-time highs. So in other words, at the start of this week, stocks are valued the same as they were at the February all-time high. So to me, guys, what this means, and here's the actual chart here, which is really neat to take a look at here, and I'll leave a link to this article so you can check it out if you're into this type of stuff. But what this pretty much means, and we're actually a little bit higher than February 19th highs, which is at 19x. We're now at 19.4x. So we're higher than where we were prior to all-time highs in the stock market. So to me, that means we could see another 30 to 40% reduction in the price index of the stock markets. S&P, Dow, Russell, whatever, NASDAQ for sure, though probably not as affected, because I think tech stocks will do a little bit, well, I should say they should lose less than all of the other sectors. The Credit Suisse analyst also said, we've expanded this analysis to cover sectors and subgroups. So multiples for cyclical groups, energy, metals, industrials, discretionary, financials, have surpassed prior PEs. Valuations for defensive sectors like staples, utilities, healthcare, REITs, as well as tech and communications remain below February 19th levels. When it comes in how this ties all into cryptos, in my opinion, not only are we going to see cryptos head lower, in my opinion, following the Dow and S&P equities, essentially, I think it's going to tag along with that move downward. It's not just because of that correlation that we're seeing right now. Fundamentally, there's no demand. Okay, you can print all the money you want, which the Fed just announced another stimulus program that they're going to coordinate with the Treasury. Bank of England did the same thing today, but you can print all the money you want, but that doesn't spur demand. You can only kind of play with the supply side of things when you're talking about printing money. You're giving more cash to banks to then lend money. They're not even wanting to do that, but I'm just saying this allows companies to expand, buy capital, supply side increases. But you can't fix demand side with printing money. You can't force a person to leave the house, especially when you got states and countries around the world forcing people to stay in the house. So I think fundamentally you're going to see a shift for a while. I'm not saying the world is ending, but things are going to be different for quite some time, in my opinion. And I think that you're going to see forced liquidation from cryptos as well as equities as you see, earnings start to pare down. We'll have to see what happens. I just wanted to give you guys an update on what's going on and where we are with forward earnings and the actual value of stocks. You may think that we're maybe undervalued right now. Don't know. You got to look at some of the technical details, or fundamental details, I should say, and derive that from there. So hope that helps everyone out there trading the stock and crypto markets. Next article. Cointelegraph, Novogratz, Galaxy Digital continues its losing streak in 2019, posts a $33 million quarter loss. It says here, according to an official April 8th announcement, the company suffered a net loss of more than $32.9 million in Q4, with the company outlining realized losses on digital assets and operating expenses as causes for the loss. It goes on to say that Digital Galaxy was officially founded in 2018 with a mission to institutionalize the crypto industry. Since then, the company has struggled to stay afloat, posting near constant losses each quarter following a major market downturn in early 2018. Galaxy Digital debuted its business with some significant losses, posting a $134 million loss in Q1 2018. While yearly 2018 losses reported accounted for more than $272 million, Galaxy Digital didn't stop losing in 2019. As reported, the crypto bank's net loss in Q3 amounted to $68 million loss. At least there was a slight improvement there from Q3 to Q4 for them, but still they lost money, $33 million that is to be exact. However, Galaxy Digital does note here that the COVID-19 coronavirus crash has not really impacted Galaxy Digital so far. It says that they touched briefly on how things are doing this year, although the company has not revealed any numbers of Q1 of 2020. The report notes that Galaxy Digital has not been uniquely impacted by COVID-19 and entered 2020 with significant operational momentum in our three operating businesses. Goes on to say that Novogratz has been similarly bullish to Bitcoin in previous years. He predicted that Bitcoin would surge to 20,000 and more in 2019. This prediction turned out to be an overestimation, with the coin rising only around 13,000 during 2019. However, Cointelegraph recently reported that Novogratz admitted that he might hang his spurs if Bitcoin does not retest its all-time highs of 20,000 before the end of 2020. And yeah, that's exactly what I was referring to. That quote that he was going to call it quits if Bitcoin doesn't hit 20,000 by 2020. And whenever you're in that situation, you're in a bad situation. When you're needing an asset to hit a certain price by a certain time, it usually ends up, the outcome is normally bad. So we might be seeing Mike hang it up after, he started this firm kind of at the peak, to be honest with you. Bad timing. If he would have started just 1 year earlier, it would be a totally different story for sure. It will definitely be a totally different story. So we'll see. Again, this is kind of from the institutional side of things, how they're doing, some of these institutional players in the crypto space. Lastly, let's take a look at Ethereum 2.0. You guys know I've been very critical of Ethereum and this so-called 2.0. Well, we can't even get past the phase of seeing when a viable testnet will go live. So there were some quotes from Danny Ryan, who is the Ethereum 2.0 coordinator. He goes through a whole gobbledygook of reasons and 2.0s and V.10s and all this testnet jargon, but ultimately they are quite far from having something viable for the public as a testnet. So Ryan says that a couple of clients are inches away from V0.11 testnets, but by inches he probably means a couple of weeks or maybe even a month or so, as the spec went out just only over a week ago. Those single client testnets will need to run for some time, the article says. So another month sends us to June, then interop with semi-public testnets in July, and then August perhaps for the actual multi-client public testnet, or as usually was just called a testnet. Meaning it may well be the case the Genesis block for the live network risks not going out this year. Oh, really? I'm shocked. Crypto Blood just didn't call this 7 months ago. And it says, as the target date keeps being pushed while we are told of quote unquote very soon. And the article goes on to say, as it stands, that full launch is hazy, meaning the full live launch of the network with sharding, conceptually moving and basically abstract, with much needed to be done to even have it working on the board, let alone in code. So they lied, essentially. At least now we know, and so can add quote unquote very soon to 2 weeks and weeks, not months and soonish. There is also the obvious risk that this is all just a goose chasing, with the real solution to scalability perhaps being just the pruning of old data, which no one cares about. That would lower synchronization costs and so on, and thus would make running a node as easy as it is now, but with far more scale. It also says without that bounding of data, sharding adds a bit more capacity, but potentially at the expense of efficiency. even for the blockchain, and clearly at the requirement of far too much time, as the incentives here might be inverted in as far as promising soon, quote unquote, might be them making more sense than just getting it done, and so leaving Ethereans with nothing to look forward to. And he ultimately says here, power corrupts, and absolute power corrupts absolutely. Devs hold power, and they now even censor in the dev controlled Reddit Ethereum subreddit, and therefore we keep getting quote unquote very soon, while by soon they mean not so soon at all. Boom. Wow. So let me know what you guys think. I got some new subscribers here in the past few months, but all my old subscribers know I've been saying this was going to happen for quite some time, over 7 months now. I told you Ethereum 2.0 was just a pipe dream. It's going to take way longer. Not saying it wouldn't happen, but by the time it happened, it would be irrelevant, in my opinion. People are using Ethereum, but they're using forked versions, closed or private versions of it successfully, but they've heavily modified it. So this public version that we know of as Ethereum, I don't think will ever gain the traction that a lot of the hype in the industry is hoping for. So, hey, just my 2 Satoshis, right? Make sure you guys leave me yours in the comments below. And shout out again to my man, a new leveled up member of the YouTube family, the Tech Geek, for the song request, Jeezy, Billions. And don't forget, I will be releasing part 1 of the interview I did with Jane Bond on Saturday, this coming Saturday. So all of you who are not members will still be able to get it. It just was a delay, so allowing my members to take action or do whatever they want to do with that information. Part 1 will be released on Saturday, and I'll probably release part 2 on Monday. Make sure you guys like, share, and subscribe if you found this video informative. That's my 2 Satoshis for today. I'm out of here, people. How?